All right, good morning. Thank you, everybody. Thank you for being here. Judges, thank you for your time. My name is Matthew Nemer, and I am the co-founder and CEO of Linus. Linus is a high-yield deposit account that gives interest rates that are not correlated to a central bank rate or the Fed funds rate. We're currently paying out 3.5% to our alpha users. I apologize for that. A couple of trends that we've noticed that I want to talk about. First, stock ownership in the U.S. is still below where it was before the financial crisis. So, recent Gallup poll showed that 55% of U.S. investors, U.S. Citizens over the age of 18, signal that they own equities. This is interesting because it's taken place during the longest bull market in U.S. history. So, almost half of the U.S. market has missed out on that. When you drill down into younger demographics, so specifically the 18 to 29-year-old demographic, that number is even lower at 31%. And 31% is trending 11% lower than it was the decade prior. So although we have new fintech apps like Robinhood that make access to equities cheaper and easier than ever, these younger demographics aren't participating in the stock appreciation. Another issue that I want to highlight is that during this same period, since the financial recession, interest rates have been below the rate of inflation. So if you're sitting in cash, if you're in a CD, if you're in a savings account, you're effectively earning negative yields. Now, there have been plenty of fintechs that have come onto the market recently. Even Credit Karma has gotten into this high-yield lending game, trying to get as close to the 30-year T-bill. But what we see is when the Fed lowers rates, they follow suit, lowering their interest rates. Inflation is also increasing, so this spread towards negative is getting even wider. Fortunately, we do see an opportunity in what is considered DeFi, or decentralized finance. Currently, it lives mostly on the Ethereum blockchain, but these are pools that match lenders and borrowers trustlessly. So on one side, you'll have a borrower that'll collateralize a digital asset. On the other side, you'll have a depositor that is putting in a stable coin. And so there's so much demand to borrow US dollars in these markets that, in some cases, interest rates are 7 times what the neobanks can offer. So how do you get into DeFi? Well, turns out it's not easy. You first have to get an exchange account. You have to buy a stable coin, DAI or USDC. You also have to buy Ether. You have to create a wallet. You need the Ether to pay the gas. And already you can see why someone who is unsophisticated and isn't going into equities isn't going to go into DeFi. And so at Linus, we've set out to solve this problem. It's inherently a UX problem in crypto. And what we've done is we've looked at the legacy market, we've looked at online banks, and we've created a streamlined US to make it easy for anyone to get the rates that are on DeFi if you know how to use an online savings account. So it looks a little something like this. It's a simple 3-step process. You sign up with our product, you go through KYC, you link via Plaid to your bank account, you initiate a deposit, and then you're earning interest. It's that easy. No faff with wallets, addresses, gas fees, stable coins. You deposit fiat, we pay you in fiat, and the withdrawal process is just the reverse of this. It's easy to use. It has a lot of features you've come to expect from a neobanking product. It's fee-free. There are no minimum balances, so you can withdraw or deposit however much you want. And there's also no term limit. So if you decide at some point in time you need your funds, you can grab them back. We think this is a great product for anybody who knows that they need to save but doesn't know how to save. So I am proud to announce that we are currently in closed beta. If you are interested in joining, go to www.getlinus.io or meet up with me afterwards and I'll walk you through how to join. That is it. Again, I'm Matthew Nemer. Thank you.